Hello everyone. This is the pre-market report video for today, 13th May 2024 for the Indian stock market in terms of Nifty and Bank Nifty. First, let's look at the global market. Last Friday, because of the very good European stock earnings, all the major European index, including MSCI Global Index, all closed positive. However, that was not transferred to US. US market did open to positive of around 0.5%. Then around 10 a.m. Eastern Time, University of Michigan released lot of macros such as inflation expectation for next 1 and 5 year time period and the present consumer sentiment data. In the SNP, top is inflation expectation and the bottom two is consumer sentiment data. Here, the consumer sentiment data dropped near 10 points compared to April month, and also it was 10 points below the expectation. It's a very bad macro which market exactly wants, so it will force the Fed to cut the interest rate. However, 1 year inflation expectation increased 0.3% and comes as 3.5% against expectation of 3.2%. Simply, what this data is conveying is, even after 1 year time period, University of Michigan expects the US inflation will be around 3.5%, nowhere near the Fed's 2% target. This macro, it's a straightforward which definitely market don't want, so it erases most of the earlier gains. In the end, Dow Jones increased 0.32%, S&P 500 up by 0.16%, and Nasdaq closed marginally negative. So we can say US market closed marginally positive. Then I want to highlight about China. First, Saturday morning they released their consumer inflation data, which yearly basis increased 0.3% against expectation of 0.1%. From Chinese market perspective, this is good, meaning demand is increasing. But on the same day in the evening, they released more macros, bank loan related ones. Here, the new loans issued in April month was just 730 billion yuan compared to over 3 trillion yuan in March. And also for the first time in the China's history since 2017, which they releasing this macro, government's social financing dropped 200 billion yuan. Usually this macro will be anywhere between positive 3 to 7 trillion yuan. Now for the first time it's negative, and that too 200 billion yuan. This I consider huge negative, showing more demand worries than some positiveness which inflation number earlier gave. So clearly this is negative for China, which probably will affect our metal stocks. About oil, it haven't changed much, but recommend to be cautious since Israel is escalating the situation in Middle East. At the time of this video, WTI crude trading at 78 US dollars per barrel and Brent crude closed at 82.5 US dollars per barrel. Then regarding Indian ADR, both IT stocks closed negative, whereas both bank stocks closed positive. First let's look at the IT stocks. News-wise, both stocks got the positive news. Infosys signed a new partnership with Formula E for enhancing the digital experience. If they succeed, probably they might enter similar deal with Formula One. Here, please note, they already had a fair bit of success in tennis, so those innovations in sports will act as the huge advertisement. Hence, it's positive only and no other bother news. However, still ADR closed on the negative note. So we can say it just followed the Indian market. Then coming to banks, HDFC Bank in Indian market on Friday, it closed negative, but in ADR it closed positive. This might be due to Zacks rank. In US, there is a stock investment research group called ZAC. They periodically release the list of stocks in either ZAC rank 1 or 2 and growth score A or B. This is a very reputed research group, so always those stocks which comes under this list will get benefited. Now they listed HDFC Bank as growth score B and ZAC's rank 2. So probably that is what increased the HDFC Bank share price in ADR. Then for ICICI Bank in ADR it closed positive, but there are a couple of not favored info. One, ICICI Cards and Payment head Bijit Bhaskar resigned on Friday. This is the first negative. Then second, on Friday, SEBI announced that they are going to conduct the preliminary inquiries on ICICI Bank in ICICI Securities delisting case. Some ICICI Securities shareholders complained SEBI that ICICI Bank influenced shareholders to vote in favor of delisting. In response to that, SEBI said that they are going to conduct the inquiry. So the positive ADR close of HDFC Bank is okay and might transfer to Indian market today, but probably the positive close of ICICI Bank may not be transferred. These are the things happened in global market. Now let's look at the India related info. First, on Friday, Citigroup analyst upgraded India's Nifty to overweight from neutral. They cited strong earnings and economic growth as reason. Also, they increased March 2025 Nifty's target to 23,900. I mean, they did explain a lot of interesting details. If anyone interested in knowing more, please let me know in the comment section. I will do the separate analysis and make a separate video of it. If required, please pause and have a look. These are the list of sectors which they were positive and negative. Please take a time. These report might influence the trading of these sectors today. Just highlighting few. Banks, insurance, auto, pharma and energy positive, whereas IT, paints, metal and FMCG negative. Second, about auto, Eicher Motors and Tata Motors released their results. Both of them delivered the phenomenal earnings. So most probably those stocks today might trade positive. However, Tata Motors issued the warning that this election might influence the sales negatively in the whole first half. So the whole sector will be on focus today. Finally, about institution, for the 7th day in a row, FI was net sellers. On Friday, the net sold for 2,120 crore rupees. However, DA net bought for 2,710 crore rupees, which kind of supported the market. As a summary, US market closed mild positive, but Chinese market looks like to trade negative today. Then this IT stocks area negative, FMCG and ICICI Bank negative news might all influence the Nifty on the negative side. In line with that, on Saturday early morning, Gift Nifty closed at 22,055, equating it with the spot market kind of indicating 50 to 70 points gap down opening. However, this Citigroup Nifty upgrade is positive. HDFC Bank listing on Zacks rank is positive, and also in addition, JP Morgan confirmed that in coming June month, as per their plan, they will go ahead of selling the Indian bonds. Then, as per stock open interest, PFC, Cipla, ACC, Birlasoft, L&T Tech, and M&M Finserv got an increase in open interest along with a negative close, indicates the short build-up. On the other hand, it's JK Cement, ABB India, Dr. Alpath Labs, Hindustan Copper, and Apollo Tyres got an increase in open interest with a positive price close, indicating the long build-up. Regarding things to look out, today UPL, DLF, Zomato, Jindal Steel, Varun Beverages, Aditya Birla, and Tube Industries are some of the major Indian companies' earnings results are scheduled released today. Regarding macro, during our market hours around 2:30 p.m., Eurozone economic forecast report is due. Then in the night, India's consumer inflation for April month and New York Fed 1-year consumer inflation expectation are some of the important items we need to keep an eye out today. Coming to technical, last Friday, Nifty opened 40 points gap up. However, it traded within a narrow range throughout the day and settled at around 22,050. Thus, on the daily chart, Nifty formed small bullish candlestick pattern with minor upper and lower shadow. Technically, this pattern indicates a temporary pause in the market after a sharp decline, and Nifty placed at the crucial trendline support around 21,900, and still there is no indication of any reversal pattern. However, on the weekly chart, Nifty formed a long bearish candle with minor lower shadow indicating negative bias. Hence, as long as Nifty holds 21,900, the consolidation is expected to continue, and Nifty may face resistance at 22,200 to 22,300 levels, but the breaking of 21,900 can drag the Nifty towards 21,775. In case of Bank Nifty, it opened flat, but unlike Nifty, it was highly volatile in a wider range for over 500 points and finally closed negative below 47,500. Thus, on the daily chart, Bank Nifty formed a small bearish candle with long upper shadow, continuing its weakness for the 8th straight session. And on the weekly chart, Bank Nifty formed a bearish engulfing pattern indicating strong selling pressure. However, at present, Bank Nifty is very close to 20-week moving average 47,240. So I don't think and don't expect the sharp decline from the current level. So maybe we might expect a relief rally this week. On the options front, the maximum call option open interest was at 23,000 strike, followed by 22,500 and 22,800, with meaningful new call option writing at 22,800 strike, then 22,500 and 22,900. Whereas on the put side, the maximum open interest was at 21,000 strike, followed by 22,200 and 21,500 with maximum put option rating at 21,000 strike, then 22,000 and 21,600. Thus, from options data, 21,000 is the immediate support for Nifty with resistance at 23,000. So that's all in this video. Hope you all got some useful information. Please consider subscribing the channel and liking the video so it will help me build the YouTube algorithm and also motivate me to do more. Please don't make any investment decision based on this, as I'm not a SEBI registered advisor. I'm doing this for me and viewers' educational purpose only. Thanks for watching.